Hi everyone, this is Carlo from Foresight FX, part 3 on the video sequence from the scalp trade that we placed on Friday until today. And I call it a scalp trade because we did it right at the close of the day, alright? So it's not a daily trade or whatever, it was a scalp trade in the continuation of it. So if you notice, I'm still, I was expecting an exit on this target price right here, 67.51. And we were missed by 16 pips alone. One of my indicators told me, obviously indicated, redundant right there, that the market was about to stop moving whatsoever in that direction for the next couple of hours. And I show you also that the resistance point in the major 1 hour chart was hit at the same time right there. Okay, so I'm gonna leave those targets in place. And this is a new Zenergy Zone. So here is a free forecast for today so you can follow up along today. Once again, this does not translate in a for sure thing. These are high probability trades. I'm not sure if they're going to end up being profitable or not, because that depends on how you work the trade per se, which I'm going to try to walk you through. And that's the whole process of demonstrating this to you, to know how to trade the market without indicators whatsoever. So pretty quick right here, what you're going to do is just going to find major supports. So we got one major pivot low, second one here, third one there. So we can say that it's going to go like so. So these two major actually fall inside the zone. That's good. I'm expecting a major pullback, hopefully by closing into the European session open. And this is a Zenergy Zone. Let's go with it. So I want to see the market, which is at 67.16 as right now at 9:42 p.m. November 15, 2009. And I'm expecting the market to drop back down between 66.79 and 66.38. The whole range of the Zenergy Zone is only about 42 pips, 42, not bad at all. Now, the stop loss is about 20 pips below the low of the Zenergy Zone. You can use the low. I usually give it take about 20 pips, just for the sake of giving a little bit more space when that happens. And in my case, it's a total risk of 61 pips if I go long as soon as the market touch the top of the zone, which I never do. Okay, I wait for my indicators to confirm that it's a very highly probable turnaround, and I showed you can use a simple stochastic to do that. I sent you a video where I showed you how to change the parameters. We'll emulate a little bit better the whole process of the momentum changing positions. So you want to see the market get inside the zone. I got the ZUP zone here, but the whole point is 66.79, 66.38. Once the market get inside the blue square, I could expect the stochastic to be below the 25 level. And as soon as they cross to the upside, you can more or less say is a high probability trade to go in. Yes, the market could keep continuing going down, but you will hold that trade until at least the 66.38 hold in place. That should be the latest support right there. If the market peers it, you can liquidate that position, or if you want to still give it a try, you can use then the 66.18 as a major emergency stop. Once that happened, the target to the upside 67.51, 67.80, 81 and 68.23, which is just we're going to use the first two, and that means that let's just take the middle of the microzone here. If we go long around that price, it's a potential of 78 pips and 108 pips. Not bad as a projected opportunity to execute on this trade. So this is November 15, 2009 forecast for execute at November 16th, 2009. All right, at the European session. This is Carlos Diaz from Foresight FX. God bless, happy pip hunting, and I hope to see you soon on the next live follow-up part 2 of this video.